Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Let's get across those movement on global markets overnight. Very positive as investor sentiment turned higher as bond yields and the US dollar fell along with oil prices despite the US and Iran launching further military strikes. Now on Wall Street, the major indices ended sharply higher, led by chip stocks ahead of more key earnings results after the bell. The S&P 500 Tech Index jumping more than 5%. The Philadelphia Semi Index 8% higher. Now after the bell, Amazon beat market expectations for quarterly cloud sales growth, with revenue at its cloud computing unit AWS jumping 37%, although its free cash flow turned sharply negative in the period. Shares in the online retailer jumping 9% in extended trade before settling lower. Apple reported sales and profits that beat Wall Street expectations, fueled by its customers buying iPhones and MacBooks amid price increases. Third quarter sales are up more than 16%. However, rising services revenue failed to meet Wall Street targets, dragging its shares 4% after the bell. Microsoft shares surged more than 15%, its biggest daily gain in 18 years after the tech giant yesterday forecast quarterly sales and cloud growth above expectations and reported CapEx below estimates, easing investor fears about the massive spending on AI infrastructure. Whereas Meta tumbled after the social media heavyweight reported a 91% fall in second quarter free cash flow, indicating the financial strain of its costly AI build-out. And among the NASDAQ's biggest advances, Nebius, SanDisk and CoreWeave all recovering some of their recent heavy losses. MasterCard's second quarter profits surpassed analyst expectations, boosted by strong transaction volumes from steady consumer spending. And in Europe, Shell's net profit more than doubled from last year to $9.8 billion in the second quarter, beating expectations helped by higher energy prices. Well, the conflict in the Middle East has re-escalated with fresh US strikes reported overnight, while a drone strike on an Egyptian port has potentially opened up a new front in the war, raising the prospect of threats to navigation through the Suez Canal, one of the last remaining export routes for Saudi oil. In the US, economic growth slowed to an annualised rate of 1.5% in the second quarter as imports widened the trade deficit, but consumer spending and business investment related to the AI build-out underscored strong domestic demand. And the core PCE inflation slipped from 3.4% year on year to 3.3%. And the Bank of England kept its policy rate unchanged at 3.75% as expected. And in terms of treasuries, the US 10 is slightly low at 4.67%. The US dollar fell to a more than 2-month low against the Japanese yen in what analysts said looked like official intervention from the Bank of Japan to support the currency that has been languishing at 4-decade lows. The Aussie jumping more than 1% overnight to 70.3 US cents. Well, oil prices settled lower after a volatile session as traders digested proposed plans for a Saudi Arabia-led maritime coalition to boost defence cooperation around the Red Sea. Iran-aligned Houthi militants in Yemen declared a naval blockade last week on Saudi Arabia, threatening the Red Sea route for its oil exports, which is an alternative passage to the Strait of Hormuz. Brent futures down around 2% at $89 a barrel. Gold rising as the US dollar weakened, spot gold at around $4,100 an ounce. Copper futures rose 3%, whereas iron ore dropped about 3% to $96 a tonne. And Bitcoin is currently trading above $64,500 US dollars. Let's get across those market moves. John Blake joining us again from Zacks Investment Research. John, welcome back to you. Let's begin with those earnings results, a key focus obviously for investors this week. Today, Amazon, Apple, yesterday, Meta, Microsoft, some mixed results there, but clearly a focus on CapEx. Those that are spending too much, those that have pulled back. How do you see what they've come up with and perhaps the investor reaction?
Well, obviously, earnings beats were getting rewarded and earnings misses were getting hit. We did get a message from Meta that there was legal costs and severance that they included at the last minute that took them into a miss that they would not otherwise have missed. So consider that. And the other one is that, Microsoft did pop 15%, but it just got back to its 50-day moving average because it's been shorted down the last 3 months so heavily. Generally speaking, all these are the enterprise cloud groups. They call them hyperscalers for a reason. They're the hyperscaled. And we're seeing, 40%, 35% growth on these groups. It's still mystifying to me how, an economy in the United States at 2% real growth how people find these numbers to come up this big. I'd really like someone to explain it to me better, but it's happening, and it's giving people comfort that the commingling of AI tools into these enterprise groups, at least the enterprise groups, the business to business groups, is gaining traction, particularly at Microsoft. So, we hear from Amazon Web Services, which is, the bulk of Amazon now. They did another 35-40% today. So basically, there is some element of at least enterprise growth of AI. I think that the flip side of that is what's going on at Google Gemini. I looked this morning at the estimate revisions, and they're for the next 2 quarters going down for the first time because of the concern that this KFX buildup is not going to play out well in the consumer space, which I think is the big idea that everybody thinks. And I frankly think there's a lot of cold water that needs to be thrown at that.
What did you make of Microsoft specifically there? Huge gains with its share price. Was that an accurate reflection of what the company has come up with?
I think it was more of a relief rally and short covering more than anything. But I do think it did speak to this idea that this first mover co-piloted Office 365 within Microsoft is functioning as an agile AI device that's being, put in place by tens of millions of groups. So that is the fundamental bull story here, is that AI as a tens of millions of users and businesses is strong. And this is, somewhat different than 2000 because we have these monolithic structures out there, these hyperscalers that have tens of millions of groups. And within that group, I think there's some confidence building that the AI CapEx, at least they've got the monopoly profits to cover it. I think the CoreWeaves, the Irons, the Nebiuses, these standalone data center groups, and frankly, SpaceX and Tesla with, mediocre $25 billion investments in AI, and Oracle, which the CDS trades are blowing up. I think it's going to be a tale of two groups. One is those that have resident enterprise groups that can scale and get AI businesses going, and these other groups that are really going to face a crisis with their financing.
John, let's turn to central bank moves. The Fed obviously meeting yesterday, leaving rates on hold. Interested to get your view as to particularly what you heard from Kevin Warsh in his second meeting. And it looks as though the markets are missing those dot plots in terms of guidance. He's saying, look, it's up to the market to work out what's coming. What did you make of what you heard from him?
Well, first of all, I think he's new to his job, and he's a rookie, and he's been in academia for 15 years, and he's been in right-wing academia with people who agree with him on everything. So I think, getting Kevin Warsh out of the echo chamber is going to take us at least 6 to 9 months. And then, he's entering a hostile environment where, 2 of the other governors have been indicted by the president who appointed him, which we mentioned in the shows before, but it's not going away. He's not apologizing for it. He's got to get along with these people. And then we've got, 3 dissenters, 3 hawks that have voted for a rate hike now. So the idea that he's going to get, unanimity behind him is also being put to bed. I mean, people said the new way forward to forward guidance, if he doesn't supply it, will be these dissenting opinions. I mean, the more dissenting opinions are, the more the forward guidance is that there's going to be a rate hike. So, then we get the task force, which is these are absurd things. I mean, he put Mark Andreessen, a meme coin founder, on the Fed task force. He said jobs and productivity task force, but who's going to worry about words like that? I mean, it's absurd. The idea that this individual who hasn't been in the world of business, much as finance, much as central bank in 15 years, is assembling a Silicon Valley-based task force for the Federal Reserve System. And this is going to go smoothly and everything's going to work out. Again, a lot of euphoria, a lot of unreality, and Mr. Warsh, as far as I'm concerned, is in for some rough sledding for a few months.
Unreality, but facing a reality check, it would seem then, John, as far as you're concerned. All right, let's turn to those 3 stocks you come up with when you join us. And these are, in fact, Zach's, the 3 largest market cap stocks on your list then. Let's kick off with Taiwan Semiconductor. What are you seeing here?
Yeah, okay. So this, these are the tentpole names of the day, right? So market cap 1.9 trillion. The industry rank 1% semiconductor site. These circuit foundry semiconductor, the backbone of the whole system, 1%. So this is we're the hottest of the hot. Earnings surprises 10, 11%, and PE ratio of 23, which is, if you look at a 23 PE ratio on a company like this, it doesn't seem to be too alarming. So, it's pulled back from 400 from 450. That's 10%. So we've got a small correction going in Taiwan Semi shares, which is not uncommon for the stock. And you can almost bet money that the day traders and the zero-day option players are going to buy Taiwan Semi shares and push them back over the 450 in the next few days. And this is what we're going to get, Andrew. Lots of counter trend rallies and a lot of believers that buying the dip is still in play.
Secondly, the granddaddy of them all, Nvidia, the largest, or in fact, it's depending on the day, it's either Nvidia or Apple, which is the largest market cap at the moment. All right, so what are you seeing? What's your thesis for Nvidia at the moment?
Andrew, what's jumping out at me is, it's a market beta of 2.2. It's a stock 4.6 trillion with a market beta of 2.2. So that's just speaking to the leverage that's built into this name. I mean, it's moving twice with the market in one of the biggest stocks in the history of the world. And so here we got EPS surprises of 5-6%, half of what Taiwan Semi has, and somewhat managed. You can think this is a managed story. And again, we've got $200 a share back from 230, so we've got a 15% correction underway for Nvidia. So not surprising to see that go on. Not surprising people are going to test this, but I would guess we're going to have a few months of sideways motion because the election is going on, because of the rates going up in the United States, because seasonality is so poor. I would expect Nvidia is just going to kind of go sideways for a while.
And finally, a look at Alphabet. Of course, it did report last week, but certainly you're seeing that strength, particularly with its Google cloud platform.
Yeah, Andrew. So now we've talked about the backbone, the chips, and the Taiwan Semi and Nvidia. These are this is the picks and shovels, right? So this is what gets interesting. So the price earnings ratio on Alphabet, which is consumer facing, 16.5. Last EPS surprise, 216%. Average of the last 4 earnings surprises, 87%. And this is more interesting even yet. This incredible euphoria when you get triple digits earnings surprises, on PE ratios of 16 because you're believing in so much growth. I mean, the projected growth is 90% year on year. None of this is of any quality. This is all frothy, low quality mark-to-market shareholdings in Anthropic and other stuff. And the big news is within it, the next 2 quarters, they're starting to grind the estimate revisions down for the first time. And that's the mark-to-market of that Anthropic stuff off the SpaceX debacle and all the new, lockups that are going to come due here in the next few weeks. And all that's going to start taking this low-quality earnings down for Alphabet. So when you see a 16 PE on Alphabet, you should just understand this is the story of this market where basically half of the earnings are these low manufactured or highly manufactured, low-quality earnings results because of all the cross shareholdings and circular financing and all these other things these small finite lever groups of business in the United States are doing.
John, thanks as always. Thanks for joining us from Zacks Investment Research.
You bet, Andrew.
All right, turning our attention to the local market ahead of the open here, looking for a very positive start, 1.1% higher on the SPY futures, reflecting on those outsized gains we saw, particularly on Wall Street overnight. Also, lots of production reports to get across. We'll do that in just a moment. Join us for the open.